You've likely never heard of this company, but they're secretly influencing everything you do, how you work, what you buy, and what goes into your retirement account. The company is so massive, its influence reaches every corner of the global economy. That company is BlackRock.
The world's largest money manager, it hit an all-time high of $11.5 trillion.
You're over $10 trillion. Yes. Congratulations.
Pinpoint what made this work in such a stunning way. What was it?
BlackRock was co-founded by 8 partners, with Lawrence Douglas Fink, better known as Larry Fink, serving as the chairman and CEO. Raised in a middle-class Jewish family in California, his father ran a small shoe store while his mother was an English professor. From those humble beginnings, Larry developed an early drive to succeed and a desire to shape the world around him.
Universities today are enrolling thousands of young men and women who realize the increasing importance of a college degree in competing for good career positions. And so the entering freshman arrives at the campus filled with determination and high purpose, ready to meet the challenge of college life.
Larry Fink would soon find himself studying political science at UCLA, but it didn't take him long to realize politics wasn't where the big money was. Banking and real estate offered bigger rewards and a faster path to power. After earning his MBA, he landed on Wall Street as a mortgage bond trader at one of the most powerful firms of its time, First Boston.
That name might not mean much to anyone under 35, but it used to be one of the biggest names in Wall Street deal-making. First Boston stands for a couple of things. It basically invented M&A as we know it under 1980s deal-making supremos Bruce Wasserstein and Joe Perella. First Boston also helped popularize junk bonds, mortgage-backed securities, derivatives, and foreign investment into post-Soviet Russia. Its former employees include BlackRock boss Larry Fink, who's now one of the most powerful people in finance.
At First Boston, Larry thrived. He quickly proved his business acumen, rising through the ranks. Under his leadership, Larry's team generated hundreds of millions in annual profit. At the height of his career, Fink was widely respected and considered one of the most successful traders on Wall Street. But little did he know, all of this would quickly come to an end when a series of bad trades led to a $100 million loss in one quarter for the firm. His chance of becoming the next CEO vanished, and he would soon find himself being ousted from the bank.
I was so angry at myself. Now it drove.
You were angry with yourself.
I was just mortified at myself. Because, and this is one of the experiences, I talk about this experience all the time because, let's be clear, the failure wasn't anybody else's but mine.
So you owned it?
I totally owned
At age 39, and without a job, after single-handedly destroyed the career he built, most would call it quit. But that wasn't Larry Fink. That failure triggered his obsession with risk management and laid the foundation for what would later become BlackRock. In 1988, still recovering from his first Boston setback, Larry wanted to join a new firm obsessed with risk management. Stephen Schwarzman, CEO of private equity giant Blackstone, offered Larry $5 million to join venture a new investment firm under Blackstone's umbrella, known as Blackstone Financial Management. Larry gathered his former colleagues. Within months, the firm's assets under management reached $2.7 billion. As the client list exploded, so did the tension between the two men. To Schwarzman, new clients meant losing ownership control, but to Larry, it was his path to building something completely new. The power struggle ended with Schwarzman selling his stake back to Larry for $250 million, which is approximately $90 billion in today's worth for BlackRock. A decision Stephen Schwarzman will later recall in an interview as a heroic mistake.
We started a company in 1988 called Blackstone Financial was in the business of managing money in the mortgage securities area. And we ended up, for a variety of reasons, selling it about 5 or 6 years later. And we had to change the name at that time because we owned the Blackstone name. And you may have heard of this company, Arthur. It's called BlackRock. That's what we changed it to keep it in the family. And BlackRock is now the largest money manager in the world, and Blackstone, which is our company, is the largest money manager in the alternative money management area in the world. And that was probably a bit of an error because the group running that business really wanted to sell it for a variety of reasons, and that was certainly a heroic mistake.
Following the power struggle, Blackstone Financial Management was renamed to BlackRock, and now Larry is truly unstoppable.
And learn about where people are going. We could learn what stores having more foot traffic. We could learn who's walking across the street.
These are data points.
These are all data points. So I don't want to say we're following an individual. We're talking about a human being. We're not watching anybody. I don't want to
get you into the track.
It's not Big Brother. We always wanted to build a platform in which we had some ability to understand the risk we were taking, and that morphed into this whole giant platform, and it's been a consistency of our firm for the full 29 years.
Remember Larry's obsession with risk management? BlackRock will spend the next decade developing a platform called Aladdin, a powerful tool backed by supercomputers that perform risk analysis across their investment portfolios. Aladdin quickly became the market standard tool used by over 200 global institutions. These include banks, insurance companies, and even governments around the world. Today, BlackRock's asset under management has grown 3,700 times to over 10 trillion USD. That's 1/10 of the global GDP. And through Aladdin, BlackRock has sensitive insights into the global financial assets said to be worth another 20 trillion. This has allowed BlackRock to reach into nearly every corner of the global economy, holding stakes in all major corporations on Earth. What you're looking at here is a snapshot of BlackRock's top holdings as of the first quarter in 2025. You'll see that each slice of this circle represents a company where BlackRock holds at least 0.5% of the total shares. And remember, in a world of trillion-dollar corporations, 0.5% can often mean billions of dollars in value. Some people say BlackRock has turned Larry Fink into the most powerful man in finance, a shadowy figure secretly pulling the strings of the global economy. But the truth is, he's not a puppet master dictating orders to the CEOs of the world's largest companies. Despite the giant numbers, BlackRock is just an asset manager. They invest money on behalf of clients. These include pension funds, retirement accounts, and even sovereign wealth funds. They don't own the money, they manage it. And who the real owners are? They are the teachers, firefighters, and even retired boomers in Florida. So technically, BlackRock is just the middleman. So here's the deal. BlackRock usually owns only a small stake in companies, often less than 8%. That's not enough to dictate terms. And as a fiduciary, it's legally bound to act in the best interest of clients, not to chase its own power. To understand how BlackRock attracted trillions of dollars in assets, we need to go back to the rise of ETFs, a revolution sparked by John Bogle, the father of index funds. His idea was simple. Instead of trying to outperform the market, just simply follow the market. Index funds bundle hundreds of stocks into one low-cost investment. Imagine if you want to load up your portfolio with big tech names, such as Nvidia, Microsoft, Apple, Amazon, and even Netflix. Buying them one by one could cost you thousands of dollars just to get a small stake in each. But instead, you could simply buy an ETF, like QQQ, which already owns all of them. This is extremely cost-effective and efficient way of investing. As you can imagine, BlackRock's iShares ETF became the go-to vehicle for this movement, giving investors cheap access to everything from the S&P 500 to emerging markets, Bitcoin, and even mortgages. The more people joined in, the more money flowed to BlackRock. They didn't get rich by picking the winners, they simply got rich by building the highway everyone drives on. But here's the twist. Even without controlling stakes, BlackRock wields enormous soft power. Through shareholder votes, they can influence executive pay, corporate strategy, and even board elections. They might not own enough shares to dictate decisions outright, but with 10 trillion in assets, BlackRock commands a level of respect at the table that's impossible to ignore. So, no, BlackRock doesn't own the world. But in a system where ownership isn't the only form of power, they don't have to. Their influence runs through the markets, the companies, and the policies that shape our lives, often in ways we never see. So maybe it's not about who owns the world, but about who can move it.